Well, thanks for joining us. I'm Marlon Bowling, and we are now in the final trading day of the month of October. Thank you so much for joining us. We have Rich Nelson of Allendale on board to help us sort things out for today. And Rich, I just checked the wire as I came walking in the studio here. I did not see any overnight export sales reported. So after a couple batches of soybeans here a few days ago, that seemed to kind of offset the cancellations from a week before that. Really not much to talk about when it comes to exports here.
You know, on the export side, I think that's exactly right. One thing which may be related to this whole issue, and we've talked about this quite a bit before, is this whole U.S. dollar issue. That might be something to look at for today's discussion. And I think one important thing we did here, in fact, just on the overnight discussion, is we did break through, finally, through those October or August 15th highs. So for this U.S. dollar, we're at prices we haven't seen here for a couple of years. So that might be a slightly negative impact for us on these commodities here.
Well, that dollar is getting up there around 97 cents. Are you in the camp that thinks the dollar could get back to par value at some point here?
At some point, it certainly could. And rising interest rates here in the U.S. does mean a pull in terms of investor money and therefore some interest on the U.S. dollar. So I actually am not going to argue too much against that viewpoint. In general, over the next couple of years, we probably will see a slightly rising U.S. dollar index here.
So I heard the Dow Jones Industrials were rallying today. I understand they had some, what was it, ADP jobs numbers that came out this morning that were pretty positive. Is that correct?
I believe so. I personally haven't seen them myself here, but I did see a lot of discussion about them here. In fact, I think one of the main points here is this idea that, yes, we still have some concerns about the stock market, but certainly in the very short term, we're still seeing some good gains. And while we're talking here, I did notice real quickly 227,000 jobs added for this private market measure of employment. So certainly much stronger than trade expectations.
Let's take a look here at our grain market overnight in the Globex trade, Rich, and kind of sort this all out here. On the corn, it was kind of a quiet night. We had December corn down a penny and a quarter at 363.5 per bushel. That would be just a tick from its low of the day. But you take a look at the overall range from the high to the low. It's only a penny and a half in the entire overnight trade. So you talk about a market falling asleep. The soybean trade, we had November on the soybeans. Trading a half cent higher at 8.34, but the January is down a quarter of a cent at 8.46 3/4, and I would imagine that's getting more volume than November now.
Certainly right, and we have to consider that this is the dominant contract right now here, and I think a lot of people will be pointing out that on this January discussion, especially these next few deferred contracts as well, from January to May, for instance, we still have a moderate premium in here, so there is a lot of discussions about, of course, January being the front month contract and of secondary interest, still some good premiums in these back months.
And don't forget, today is first notice day on November soybeans, so that is in effect now. They're in delivery. Wheat trade overnight. Let's take a look there. That has fallen on hard times here recently and had some fairly significant declines. December Chicago wheat down again overnight, down 4 3/4 at 4.95, well under the $5 mark now. Kansas City wheat, we had that December contract trading at 4.90.5, got as low as 4.90. That would be down 4 1/4 cents where it now stands. And on the Minneapolis spring wheat trade, we currently have December showing the last trade of 5.70 1/4 overnight. That was down a penny and a quarter. By the way, on the cotton, we had that December contract last night 7 points lower at 76.83. Any hope for this wheat market basing out anytime soon here, Rich?
In the grand scheme of things, I think we have to consider the fact that this dollar index is a problem for us, and we do expect some increase in U.S. wheat exports, but maybe not until we get maybe into December or a little further down the road. So I think in the short term, we do have some concerns about this market trying to hold this $5 mark.
Okay, good point. Now, we'll come back in just a moment here, Rich, and we will take a look at this livestock trade, what to expect on the final trading day of October when we come back. We're back with you. We're talking with Rich Nelson of Allendale right now, and we're going to focus now on our livestock trade. And the livestock is in a bit of a conundrum here, Rich, where we had the cattle market. We talked about it yesterday, where it really rallied hard late Friday afternoon in the cash cattle market. And then after that, it seemed like, well, mission accomplished, and the futures couldn't do much here this week. What do you think might happen today on the cattle?
For this one, for the most part, we expect kind of a slightly higher trade, maybe just a few cents, something like yesterday. We, of course, have our concern about higher show lists, but between Monday and Tuesday, we still are looking at higher wholesale beef, up $1.81 for choice and up $4.05 for select. So we still suggest this might be a slightly positive tone for us here in the general sense.
Okay, overall, once again, referring back to the jobs data and the overall equity markets, from what I understand, we're probably going to end October on an up note in the equities trade, although it could be maybe the worst ever October performance overall when you look at the entire month. What does that mean when you translate its impact here on the meat trade?
I would actually refer back more to consumer spending habits and not whether the stock market is breaking, but whether consumers are spending their money or not is probably our focus here. Yesterday we had that monthly consumer confidence report. That one still showed consumer confidence rising to the highest level since August of 2000. So on that respect, I'm still suggesting we do have a slight demand increase for beef in general over this next year.
And it still sounds like we have an overall job shortage across the country, right?
Very valid discussion point, too. What is this? The largest job openings per person in some years, so quite good numbers here.
Talk to me about the hog trade then. What do you expect for an open on the hogs, and which way would they go today?
As far as this in general, we look for something like yesterday, kind of this mixed trade. I think this trade established some higher prices based on our newer understanding of supply for the next 2 weeks, but we need some further ideas, some further support to continue this rally. So on this hog issue, we look for just mixed trade for today's discussion.
You do? Okay. Well, thank you, Rich, for pointing that out. Rich Nelson is with Allendale Incorporated, and he's based in McHenry, Illinois.